Okay, so right now let's get to the first system, the most basic system that I use, and this is called the breakout with confirmation system. Basically, it allows you to trade breakouts not only just by looking at candlesticks but also with a confirmation indicator. Okay, later I'm going to show you what I mean by that. So the two currency pairs to focus on for this strategy, okay, is pound dollar and pound yen. And one very important thing in trading is that not all strategies and systems apply to all currency pairs. So your job is to find out which system can be applied to which currency pair, which indicator can be used on which currency pair. Okay, so basically I've done the work for you for this one, and the two currency pairs that you should only focus on is this two. Okay, but I'll move on definitely to other currency pairs if you decide to proceed on to learn the next few systems. Okay, but right now we just focus on these two currency pairs. So how do you trade breakout with confirmation? Of course, the main foundation criteria, you need to make sure that it is fulfilled first. You are not trading against the trend, or in other words, you are trading along with the trend. You're not going against the wave, okay? Because when you go against the trend, it is very likely high chance that you are going to lose money in that. So why not just ride along with the trend, which makes things easier for you, okay, as a trader. So the second criteria that you need to make sure is that the price has to touch 20 SMA for the day and also for the week. Okay, meaning that you need to switch from H1 time frame, you need to look at that and make sure that it has touched 20 SMA. And then you also need to switch to H4 time frame. And then look at that and make sure that for this week, it has already touched 20 SMA. So then a lot of people ask, okay, then which time frame is more important? Personally, for me, I will look at H1 more than H4. If H4 hasn't touched 20 SMA, but H1 has already touched 20 SMA, it is still safer to go in as compared to if for today it hasn't touched 20 SMA, but for the week it has already touched 20 SMA. Okay, but personally for me, because I'm a more conservative trader, I would want to make sure that it has touched for both the day and also for the week. So with any breakout strategy, you need to draw support and resistance. Now, if you forget how support and resistance work, then you can go back to the previous lecture and then revise a little bit, okay? But make sure that right now you draw support and resistance for the previous day. The highest point, the lowest point for the previous column. Okay, later I'm going to show you and you get a better picture of it. You need to make sure that 5 EMA locks below or above. And here's the thing, the 5 EMA is our confirmation indicator. So make sure that you go back to the 5 EMA lecture if you're not clear about it and revise how does it really work. And of course, the final step, you enter a buy or a sell. So the way a lot of people trade breakouts is just by candlestick alone, which you shouldn't be doing. Because if we trade breakouts by candlestick alone, we're going to get a lot of false breakout, okay? So this is an example of how not to trade breakout. Let's say, for example, this is the current trading day, okay? We see a breakout here, okay? This current trading day, of course, we draw a previous resistance line at the previous day highest point, okay? So we see a breakout of the candle over here. You see the whole entire candle body is literally right on top. Of course, in this entire case, it's an uptrend market. We are looking for a buy trade, right? So when you make a buy trade and you enter for this trade, you would see that there's a massive retracement all the way down. Because why? If you recap 5 EMA a little bit, you draw the vertical line here downwards. Where is the 5 EMA? It is in fact right here, still below resistance line, meaning that there's no breakout at all. As long as the 5 EMA is below the resistance line, then there is no breakout, okay, for a buy condition. Then the second reason why there's a major retracement is because, remember how 5 EMA works also, it acts as a magnet for the candlestick. So because there's such a large detachment from 5 EMA, it has to come back down. and touch 5 EMA. Remember, don't go and short sell here, okay, because you're trading against the trend if you short sell over here. Because I understand that some people, they try to pick highs and pick bottoms, and they see that there's a resistance line right here. They are going to make a bet on the sell. You can win once in a while, but in the long run, it's not going to help you in your trading. So another example of how not to trade breakouts. So right now, we're also looking for a buy trade, correct? Now, if you look at this day, let's say this is the current trading day. Now, of course, same thing, we draw previous day resistance line right here at the highest point. Today, you see that there are 2 candlesticks which broke the resistance line. Okay, by now you already get the point. Right now, this candle, the whole entire candle is actually above resistance line. But then again, look at where 5 EMA is. It is way below here. Okay, so you make a buy over here, you're gonna get killed because this retracement is enough to stop you out if your stop loss is around here. How do you properly trade breakouts? Okay, so obviously you look at this market, it's a downtrend, going downtrend, candlestick below, so it is very likely a sell trade. We are looking for a sell trade, so hence we draw a previous day support line. So make sure that first step, you're not trading against the trend. Then second step, the candlestick has touched 20 SMA for today. So let's say, for example, this is the current day. Okay, this is the current day. So we draw a previous day support line. Lowest point, which is right here. Then right now, once we have drawn the line, we want to wait for a breakout. So what are we looking for? Essentially, 5 EMA to break this support line. So you can see that this candlestick, okay, where 5 EMA is, it is below support line. Whereas for previous candle, it is not. Alright, so for this candle, we don't enter at this candle. This is what we call the confirmation candle. Okay, if you want to write this down, a confirmation candle. Because your entry is going to be the next candle, which is this candle. You're going to make a sell over here at this candle. Okay, this is your final step, your entry candle. When this candlestick is confirmed, you will enter right here, around at this price. So why is it so important to wait for this confirmation candle to be formed first? Because a lot of times when we enter, when the 5 EMA is still fluctuating, it might fluctuate back upwards. If you really test this out, if you really look at how 5 EMA operates in a live trading condition. So of course the entry part is the easier part. Then where do you put your TP? Where do you put your stop loss? Okay, make sure that your reward is always more than your loss. If your reward is equal to your loss, then make sure that you have a high win rate. Okay, so that's how we win the so-called casino probability game. So your target you set as 30 pips. Okay, not 30 points, 30 pips. Then for your stop loss, you set it as 20 pips. This for pound dollar. Take note of the currency pair because you don't want to mix it up with other currency pairs. Okay, now for pound yen, again we go through the same whole entire process. Imagine this one is the current day and this one is the previous day. Now, of course, first step, we'll make sure that we are trading along the trend, in this case of buy. And then after that, of course, we need to make sure that price has touched 20 SMA, okay? You probably right now already know that. So I'm going to go to the more important part. Draw your resistance line. Now this is for buy, okay? Don't confuse support and resistance. Resistance line is always for buy market, then support line is always for sell market, okay? So in this case, we draw a line. Then second thing, we'll make sure that 5 EMA breaks our resistance line. In this case, it is this candle rather than this candle. Because if you look at where 5 EMA is for this candle, this whole entire candle is still below. Whereas this one is a lot more obvious, it is above the resistance line. This red candle would be your confirmation candle. And of course, your entry candle would be right here. So wait for this candle to close first. Then once you enter, you're entering at around this price, around 145.400. So you enter at this candle, and again your TP and stop loss. TP 30 pips and stop loss 20 pips. And also don't confuse the number for stop loss, the number for TP, because some people they might put 20 pips for TP, 30 pips for stop loss. That's not going to give you a good risk to reward ratio. Now of course, with all those trading criteria, you also need to make sure that you don't trade at certain times, which will give you a lot more risk of losing. Because the forex market is very unpredictable at times, it's very important to protect yourself. There are many factors that would cause you to get stopped out. But some of the factors that I find important is number one, okay, don't enter after midnight. Because very likely when you enter after midnight, the price is not going to go the way you want it to go. When you enter on midnight, very likely the next day it has to come back down and either touch 20 SMA or it just has to retrace. Now of course this one you already know, avoid entry into detachment from 5 EMA. If the candlestick is way above or way below 5 EMA, then try not to enter. To be specific, if it's detached by more than 20 pips, don't enter because that's a really large detachment. But there's no fixed number for this. But if you practice enough, you get to know when it's going to retrace. Okay? And of course, don't enter during high impact events. Political events, economic events, like changes in interest rate, elections, those are going to move markets rapidly, and our system is going to be not useful during this type of events. Of course, there are many events that we can't predict, so we just focus on what we can control. Okay, later I'm going to share with you how do you determine where to find the high impact events. And of course, another rule is don't hold your trade over the weekends. Close your trades, if you open trades, by Friday night 2359 to be specific. Because very likely when you hold your trades over the weekend, you realize that there will be a gap in the price. And also the other thing is that don't open a trade on Friday night. 7 PM onwards, don't open a trade. But if you have an open trade that you've opened earlier at the day, at daytime, then you close before midnight. Now of course another criteria is don't trade on Mondays, because you realize that you always need the previous day support resistance. Whereas for Monday, if you draw the previous day support resistance, in real fact, you're actually drawing Friday support resistance. Because you can't trade Monday breakout using Friday price. You want to use previous day price. And in this case, because a lot of brokers, they don't provide Saturday, Sunday prices, then we don't trade on Mondays. Then we trade on Tuesday, Wednesday, Thursday, Friday.